Welcome back to TeshKidFX for another Quant price prediction update, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart. We are also holding above a key area of support at around the $110.9 mark, which is now acting as support for us to continue gearing up. We have also continued to obey this chart pattern, which is an ascending channel, where you can see that at the time of this recording we are trading at the lower side of this channel, and in case we continue holding above the 20-day MA and maybe see a bit of an increase in the buying momentum here on the Quant chart, there are chances that we might see that run up to the upper side and maybe see a breakout out of the chart pattern to the upper side and continue seeing further upside. But in case we see a breakout out of this chart pattern to the lower side, then I'll be watching our key area of support at around the $110.9 mark, because that can give us support and then find that bounce back to the upper side. But in case we lose it, then we need to keep our eyes on the next key area of support at around the $106.6 mark. We have also continued to obey the Elliot structures, where you can see that here on the Quant chart, I can start the video by first giving you the long-term outlook here on the Quant chart, where you can see that after seeing the bear market low down there at around the $40.1 mark, we saw that impulsive wave to the upside, where we saw a 5-wave structure having the wave 5 giving us a peak at around the $229.9 mark, and also completed the formation of that first wave to the upside. And after seeing the high for that first wave, we started a corrective structure in the formation of these larger Elliott wave count 2 in a move that managed to get into the minimum retracement area highlighted here on the charts using this red target area, which is an area that I came up with by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. And that gave me a minimum retracement area between the fib level 0.5 and the fib level 0.78, which lies between the $134.9 mark and the $81.3 mark. And you can see that we saw that breakdown in a move that gave us a low at around the $94.4 mark. And having that in mind, that you have seen the formation of that first wave and a corrective structure in the formation of that wave 2, in a move that has managed to get into the minimum retracement areas, there are high chances that right now we are in the start of the formation of this wave 3. But for this wave 3 to also play out, we need to continue holding above key areas of support over here. And in case our chart patterns continue giving us breakouts to the lower side and we continue seeing further breakdown here on the Quant chart, and maybe even lose significant areas of support, there are high chances that we are still in the formation of these larger Elliott wave count 2. And if that is the case, then whatever we have here on the charts is an ABC corrective structure, where we can term these as the wave A, then a wave B giving us a peak at around the $165.5 mark, and whatever we are seeing at the moment is the start of an impulsive wave in the formation of this wave C, in a move that should give us one more leg down below the low that we made at around the $94.4 mark. So there are high chances that in case Quant continues to see further breakdown, lose our key area of support at around the $110.9 mark, maybe also lose the $106.6 mark and the $100.3 mark, there are high chances that we are going to see an $80-point-something Quant very soon in the formation of that wave 2. And in case such a move plays out, I think there's no reason for panic, because that would be another perfect entry into Quant to be able to ride that massive pump to the upside in the formation of this wave 3. So that is what I'm expecting here on the short-term scenarios and also on the long-term scenarios on the Quant chart. And also taking a look at the indicators on the RSI, we are trading at around the 50 mark, meaning we have massive room for us to fully support further breakdown in case such a move plays out. But in case we see that bounce back, that will still be supported on the RSI. Also taking a look at the MACD, we have been able to print a bullish cross. So let's be patient and see how that plays out, and I'll be keeping you updated.